Good morning, good afternoon, good evening, traders, wherever you are in the world. I hope you're all well, and I hope you all have had an amazing weekend. Pips of Persia here, coming to you with another weekly market outlook video, preparing you for the trading week of 15th of April 2019 to 19th of April 2019. Now, before we get started, as usual, disclaimers. These setups are purely for educational purposes and by no means require any action. Your capital is at risk, therefore never risk more than what you are willing to lose. Past profits do not guarantee future results. Again, goes without saying, out of the pairs that I will be analyzing today, please make sure to take notes and take screenshots of the ones that you agree with. If your analysis in any way disagrees with mine, please stick to your own analysis. That's the best way for you to learn, okay? Make sure to leave a comment below as well and let me know if you agree or disagree with my analysis and the reasonings behind it as well. With that being said, let's go ahead and get started. Let's have a look at the economical calendar for the coming week. There is quite a few high impact news that I will have to be looking out for throughout the week, starting on Monday, but mostly around Thursday. And towards the end of the week, Thursday and Friday, we can see there's a lot of bank holiday as well. So on Friday, to be fair, on Fridays, I don't really like to execute trades anyway. However, in this specific case, I expect the markets to be quite slow, especially with GBP bank holiday as well. So definitely keep an eye on Forex Factory this week because there's going to be a number of high impact news, and especially if I go ahead and put the medium impact news in as well, you'll see that is a very big number of news coming out this week, that all of these can suddenly shift the market in a certain way, and without you kind of even noticing, it will suddenly hit your stop loss. So 100% keep an eye on these, 100% keep an eye on the ones that are some sort of a meeting, some sort of a speech, such as these ones that I've just highlighted. And these are the ones that give a more clear indication of the direction of that given currency against the remaining currencies rather, for let's say the next week or two minimum. Okay, so keep an eye on these type of news. Watch it if you can. If not, make sure to read the related articles after. Now, let's go ahead and jump straight into it. Now, I was analyzing the Australian dollar weighted index. For those of you who don't know, there's a video recorded for Australian dollar weighted index on my channel, for just weighted indexes in general. Sorry, not just Australian dollar. So go ahead and watch that to get a more detailed understanding of exactly what the weighted indexes are. But I was looking at the Australian dollar weighted index, and what I can see is this previous zone in the market has been tapped off twice over here, and we got a major decline for Australian dollar after that. Now we have visited the same zone again right now. Therefore, I am expecting Australian dollar in general to lose some strength across the board. I do understand that on a daily or a weekly time frame, when the market came and touched this zone, I haven't really gotten any sort of a bearish reversal signal. So yes, I am going to keep in mind that it's likely for this, not that it's likely, but this can happen as well. Break above, retest from the other side, and the continuation to that direction. That can happen. However, from a technical perspective, what I can see is that the previous reversal zone has been tapped off again. We're in this double/triple top zone where the market can actually decline. That means I'm going to remain bearish on Australian dollar across the board against the remaining pairs. With that being said, let's have a look at some pairs. Australian dollar against the Canadian dollar. The analysis for this one is quite simple. It looks very it looks very similar to Australian dollar weighted index itself. It's the zone that I've highlighted over here, where we've got a touch of this zone once, twice in the past, and now we've come and touched it again. So almost a triple top formation over there, expecting the price to decline. Not only that, on a 4-hour time frame, what's happened over here is that the market has created this higher high right over there, and when we are looking at our MACD, we can see that our MACD has created a lower low. What does this mean? The market is diverging. Our actual candlesticks are creating a higher high. Our oscillator is creating a lower low. Clear divergence in the market, previous reversal zone, expecting a very nice decline down to this highlighted zone on the 4-hour time frame. This previous reversal zone. Obviously, any break of these previous zones, this zone would be one of them, right over here, as a potential take profit zone. This could be your first take profit zone. This could be your second take profit zone. So long as these zones keep getting broken to the downside, then you can start to look at other zones as well. But this will be another zone you need to keep your eyes on. Then your final zone would be down here. It goes without saying that all of the zones that I've started to see a reaction on, that's where I'm basing my my rectangle on. But the main zone that I highlighted was the one right over here. I do expect this to be a very nice decline down to this zone over here. Australian dollar against the Swiss franc. I did put this on my Telegram last week, if I'm not mistaken. Very, very simple analysis. This is on an 8-hour time frame that I'm looking at it right now. I've gotten a touch of a trend line over there. Second touch, third touch. Coming for another respect of the trend line, as well as it lining up with the highest daily closure over there. Now, you guys have seen in my videos that I am quite big when it comes to daily closures, because in my eyes, daily closures are very, very important. It shows you the highest point the market could be maintained, the price could be maintained on that daily time frame. That means that wick is just a shadow, if that makes sense. The price could not be maintained any higher than where I've marked it over there. That means that closure in itself could as well be a reversal zone. I'm expecting the market to climb up, tap off that previous highest closure on a daily time frame, tap off the trend line, and then we can go ahead and take some nice sell positions to the downside. Could be a nice 200 pip move to the downside, so long as we get some sort of a candlestick confirmation as well. Australian dollar against the New Zealand dollar. Now, last week I was expecting this market to give us a move to the downside, then we can catch the move to the upside. However, what happened is that the bearish move never happened. This market, as choppy as it was throughout last week as well, it started to climb up and it finally tapped off this daily zone that I have marked up over here. So again, one of the highest daily closures over there. The zone that I've marked up, you can see the bottom of the zone is the highest daily closure of these two candles, of that candle, this bullish candle over there, and the top of the zone is the daily closure for that candle, this zone over here. Okay, we can see on a daily time frame it came and tapped it off. I wouldn't really consider that a shooting star formation. I would like the body to be a little bit smaller. However, what I can see that this kind of choppy momentum to the upside is begging a move to the downside. Okay, on an hourly time frame, we are coming to some very, very big divergence on our MACD, some huge divergence that's still not satisfied, meaning the market is likely to drop. And on a 4-hour time frame, when I look at it, I can go ahead and mark my divergence for this very last move up. And I can see from these 2 points, I have some very clear divergence in this case as well. So I am going to remain very, very bearish on Australian dollar against the New Zealand dollar as well. New Zealand dollar, I believe it could be a very, very nice sell to the downside. Again, nearly 200 pips sell to the downside. And Canadian dollar versus the Swiss franc. 4-hour time frame, we've got in this inverted head and shoulder formation. We actually got a break above and the retest of the neckline. We've already gotten that. So any sort of a pullback that I get for CAD CHF, I will be executing some buy positions to the upside. Now, since this kind of zone itself, that part isn't too many pips, it wouldn't increase my risk as much. But any sort of a pullback that I get to the downside, I will be executing buy positions with my stop loss below either this low over here or this low over here, okay, depending on your account size. So because of this inverted head and shoulder formation, I will be remaining bullish on Canadian dollar versus Swiss franc, and I will be riding this up to this daily closure zone. All of these wicks over here, all of these rejections, I'll definitely be riding this pair up to that area. Euro versus the Australian dollar. Let's have a look at it on a daily time frame. So yeah, have a look at this note over here. It will make sense when I'm going through kind of other euro pairs as well, because some of you might be thinking, oh, how comes I'm buying euro and selling euro at the same time? But I'm going to remain bullish on this pair specifically because of the weak Australian dollar, as you saw for yourself. So don't let this confuse you with the analysis I'm about to go through for the other euro pairs. But very simply, one touch, second touch of the trend line, coming for the third touch of the trend line, and a Fibonacci tap off, 71% Fibonacci. Very ideal setup. One touch, second touch, third touch potentially of the trend line, and a fib level tap off. As soon as I get a reaction of the 71 level and the trend line, I will be executing buy positions to the upside. Very, very simple analysis. Looks very, very good to me as well. Euro versus Canadian dollar. On a larger time frame, on a daily time frame, we do have this head and shoulder formation. On a 4-hour time frame, a trend line. I've kind of marked up a zone over here rather than just a line, but this general zone, this general trend line zone, one touch over there, second touch over here, I expected the market to come and give us a clean third touch. It didn't. It ended up falling. If I'm not mistaken, on an 8-hour time frame, yes, on an 8-hour time frame, we actually got an evening star formation over there as well. However, I wouldn't be surprised if this market climbs up, gives us a potential double top over there, taps off the trend line, and then continue falling. If this doesn't happen, then we need to wait for the market to break and retest below this trend line, or this zone that I've identified over here. But because of 1, the fib level, 61.8, 2, trend line, and 3, the general structure of the market, which is a bearish flag move, choppy move in the opposite direction, clear flag formation, I'm going to remain bearish on this pair, and I do believe, and obviously on the daily time frame we have a large head and shoulder formation, I believe we can ride this down minimum to the minus 27 Fibonacci extension. In terms of where my entries would be, obviously the ideal scenario for me would be to get a pull, a pullback to the upside, so I can enter somewhere up there rather than a decline, so for me to be able to find entries there. But one scenario would be move to the upside for me to enter again at the top over there somewhere, or a break and retest of this trend line over here. Okay. Euro versus the Swiss franc. What time frame was the analysis on? 4 hours as well. Yeah. So on a 4-hour time frame, Euro versus Swiss franc, again, the trend line that I've drawn over here, I can see one reaction off the trend line on the top over there. Second reaction over here, bear in mind, that's a wick. Therefore, that's a reaction. That's a respect of the trend line. It's not a break. It's a respect, okay? So second touch of the trend line. Third touch over here. Looking like we're coming for the fourth touch of the trend line. Now, normally I wouldn't really be kind of bullish on this, bearish on this pair, especially because 78.6 isn't my favorite Fibonacci level to take entries based on. And I would like to take my Fibonacci based entries when it comes to more or less the third touch of the trend line rather than the fourth or fifth or the sixth touch of the trend line. However, this whole structure of the market moving to the upside isn't really impulsive, isn't really a powerful move to the upside for me to say that the bullish momentum has completely taken over and the market is ready to completely go bullish. Now, I don't really see that. So I'm just going to wait for the market to climb up a little bit, tap off, let's say the 78.6, but more or less I'm waiting for the trend line for the potential sell orders to come in play then. Going to be remaining bearish on Euro CHF as well. And so long as I get some sort of a price action, bearish price action, I'll be executing sell positions. Euro versus pound. Trend line that I have drawn over here. Again, on a 4-hour time frame. One touch of the trend line. Second touch of the trend line. And a third touch of the trend line over there. Lining up with the Fibonacci drawn from this high to this low. Okay, final high to the final low. This move down for this whole move to be the retracement. Okay. So again, third touch of the trend line and a Fibonacci level. Now, this is a very ideal setup for me because as you can see, when the market's climbing up, it's gone very choppy. It's gone very indecisive. So I do see this market dropping, and I can also see a very clear divergence right over here. Market creating that higher high over there, and our MACD creating a lower low right over there. Very, very clear divergence in the market as well. Market going higher, indicator going lower. So a lot of nice strong confirmations, touch of a trend line, Fibonacci level, divergence, expecting a very, very nice decline for Euro versus pound. Euro versus New Zealand dollar. This was a huge divergence on an hourly time frame as well, if I'm not mistaken. Yes. So The divergence on the hourly was very, very dominant for this one, where, as you can see, similar to AUD and ZD, and we had some very, very big divergence. However, the bearish move for Euro and ZD did start last week, so we did suddenly get an impulsive move to the downside. What I'm waiting for on a 4-hour time frame, because we have kind of already broken below this trend line that I had drawn over here. I probably should draw it a little bit better like that. And what I really want to see is a potential break of this trend line, pull back to retest it, to then go ahead and execute some sell positions. A move like this. This would be a very ideal setup for me. A break and retest to go ahead and take some sell positions there. Or if this market wants to give us another move to the upside, then potentially we can take some sell positions at the top of that zone over there. However, I believe this sell momentum is likely to continue on an intraday basis. Pound versus the Swiss franc. Again, 4-hour time frame, what I can see is a head and shoulder formation. So left shoulder, head, right shoulder on a 4-hour time frame. I have drawn the neckline over here. Very, very simple. Waiting for the break and retest of the neckline for the continuation to the downside to start. On a daily time frame, what I can see is I have a trend line over there, one touch, second touch. Over here, we got some fake breakouts of the trend line, but the market kept coming back in very quickly as well. So I'm going to consider that trend line being valid as well, especially the number of times it touched it after it came back in as well. However, the majority of this analysis is based on the head and shoulder formation, okay, just based on the structure of the market. So I can be risky and go ahead and sell it now and hope it drops, but the best way to enter it would be to wait for a break and retest of your neckline. As soon as you get your break and retest, then you can wait for your continuation to the downside. That would be when the head and shoulder would be satisfied. Pound versus the New Zealand dollar. I believe I did share this analysis last week on the weekly market outlook video that I posted on the YouTube channel as well. However, the move expected didn't really come last week, so I hope it comes this week. Let's have a look, because in terms of technical analysis, this looks very, very good to me. Touch of the trend line, one touch over there, second touch over there, awaiting a third touch of the trend line, potentially for that touch to line up with this previous reversal zone over there, that previous reversal zone over here, which lines up with the key fib level as well, from that high to this low. Okay, so there's a lot of stuff lining up in one position. Previous reversal zone, Fibonacci, trend line. Expecting the market to climb up, touch that off, and then decline and then drop. It didn't happen last week. It's just a matter of patience to see if it's likely to happen this week. We'll see. Even if it doesn't, obviously we can reanalyze it and change our bias towards it. New Zealand dollar versus the US dollar. On a 4-hour time frame, again, what I can see is almost, I'm going to consider that one touch of the trend line, second touch of the trend line, third touch of the trend line. We got a fourth touch over here. However, we ended up breaking below, getting our pullback, and the potential continuation to the downside is looking like it's starting. On a 4-hour time frame, we ended up over there getting a shooting star formation as well. And we actually ended up breaking below this marked zone over here, where we can see reactions in the market, a lot of reactions over there, reaction over here. So we ended up breaking below, coming up for that retest of it. So expecting a very nice continuation on an intraday scale to the downside. Looks very, very good to me for a potential sell. If this market does want to push up, you can wait for a more kind of defined retest of the trend line and then ride it down further. But from a technical perspective, I'm just expecting a smooth bearish decline. US dollar versus the Swiss franc. The analysis, again, it's kind of the same as what I was going through last week. We still have this Fibonacci. I believe I slightly touched on this Fibonacci in the last week's video. We ended up getting a touch of the 61 to 71%. Again, similar idea, exactly as I showed it in the last video, similar idea. You have this bearish flag. you have this impulsive move, you have this flag formation. Now it's touched the key fib level, being the 61 to the 71 level. So expect for this bearish flag to be satisfied. Again, I don't really want to be selling it all the way down there. I could do. Depends if I get a nice sort of candlestick confirmation as well. But point is, you can be waiting for the longer term buy to come in play. Bearish flag, let that be satisfied. Let the market drop down to touch this trend line again. One touch of the trend line, second touch, third touch, coming for that fourth touch. Potential another touch of the trend line and a Fibonacci level 61.8. So just wait for the fib level and the trend line to be tapped off for the bearish flag to be satisfied, and then you can go for some buy positions on US dollar versus the Swiss franc. Gold, finally, gold was a pair that we were looking at in the last week's video, where if you guys remember, this zone was drawn in gold last week. None of these stuff had happened before. So what happened with gold is we mentioned in the last week's video that because due to this structure over here and the sort of divergence / convergence that we had on our MACD, and this move to the upside was quite likely to happen. And on Monday, for those of you who are following me on my Telegram, if you don't, I'm going to leave the link in the description below, and make sure to jump on the Telegram channel as well. On Monday, I posted this analysis for gold on my Telegram. This was the exact analysis for it, where we had a look at the head and shoulder formation, at the Fibonacci level, at the previous reversal zone over there. And 1310 was the execution zone, which was tapped off pretty amazingly, to be honest with you. This was tapped off to perfection. Then we ended up getting our decline kind of after that as well. Very close to the final take profit being 1285. However, I do see gold drop further. I genuinely do see gold drop to around 1270 even. I do believe that gold has some more room to go down, definitely. So again, as of yet, there's not much more to do for gold. Just waiting for some sort of a pullback for potential re-entries if you're not already in a sell for it. I do have GBP CAD and GBP AUD kind of marked up over here as well. However, these are two pairs that I covered in the past 2 weeks in the videos, but because they've kind of been consolidating, just kind of going up, coming down, going up, coming down, having a kind of choppy momentum, I'm going to say, it didn't satisfy the swing expectations that I had for them just yet. So I'm just keeping an eye on these. When they come to the desired zone, I'm going to go ahead and send an update for them on my Telegram channel and go from there. So that's kind of all the pairs that I have been focusing on for this week. I'm going to again wait for London and New York session to reanalyze, and then I'll update my Telegram from there. Make sure to always wait for price action before you execute any trades. Make sure to jump on the Telegram channel. Again, I'll leave the link down in the description. I'll be sending updates there. I will be sending some charts over there as well, especially the ones that I haven't analyzed in this video. I'll be forwarding them there. If you guys have any questions, please do not hesitate to message me on Instagram at PipsOfPersia. Again, I'll leave the link in the description as well. Let me know what you guys think of the analysis, whether you agree, whether you disagree. Make sure to leave a comment down below. Make sure to connect with me. Let me know if you have been finding value from these videos as well. Have an amazing week. Stick to your trading plan, stick to your risk management, and let's smash it. Let's catch some pips.